Welcome back to Mortgage Giants. I'm tall, he's taller. Let's talk mortgages.
Great. Talk mortgages.
All right, question for you. What is something in the mortgage process that you don't think clients give enough weight to or put enough emphasis on?
Yeah, I think the timing of it all.
Mm-hmm.
I think that people are a little cautious or hesitant. I don't know always which one it is, but the last couple of weeks, if it's taught us anything, is that rates are very volatile.
Mm-hmm.
And when rates are going up, which they have been, I mean, this is now mid-July, and the last several weeks have been really hard on fixed rates, like to the tune of 0.5%, 0.75% in a month span. Like it's been aggressive. So a person that has waited, not jumped in with both feet and committed to the process, are going to pay for it. Because we're talking about, generally in Canada, the standard terms are 5 years. And now if you're paying 0.5% to 0.75% higher interest rate for 5 years, that has cost you a significant amount of your your monthly expenses are now dedicated towards interest. So if you're going to start the process, mentally say, like, get into that zone and say, I am dedicating this morning on this day to do this. Don't piecemeal it out over 2 weeks, 3 weeks, because in this situation we're seeing people, unfortunately, literally pay for it. So I think that's the process challenges right now. It's commit, jump in, and do it. Like, if you're set in that time for dedicating it to the mortgage, it actually will go quicker than you think. It's more painful when you do a bit here, a bit there, take some time, weekends come, distractions happen.
And there's ways to still combat things if rates get better, because I feel like some people are like, well, I want to wait just to see.
You're right.
And it's like, no, we can still move forward, and if rates get better, we have options to pursue. But it's way better to get something on hold.
That's nailed it. Totally true. Because we're brokers, we can start with option A. Day one is the green bank. And if you're on the ball and your mortgage doesn't renew for 4 months, well, it could change to the red bank, or we totally change. It's just we need to always take the best option today and watch it improve. If it doesn't improve, well, we did the best on the first day available. Like that's totally true.
People definitely don't give enough weight to like, get it done as soon as you can. When you have that, when you're ready to go.
Like if you got 120 days before your renewal, think of it as the wide berth of every option. And as we get closer to the renewal date, the window narrows. It narrows and narrows, and you're just reducing your it's odds. The more time you have, the better odds you have of watching a market improve. Another
element that I don't think people put enough weight on is the emotional release, specifically with refinancing. Like, if you're drowning in debt but you have equity, sometimes people like, I don't want the large mortgage, I don't want the higher rate. But imagine going from 6 payments down to 1. And like, you are going to get further ahead, and there will be an emotional release, a weight lifted of only having to worry about 1 payment and not having that high interest debt on your back.
Oh man, those are some of the most rewarding files for sure. And what happens too is, I think when you're going to start off, go back, to a higher mortgage balance, but when you reduce those 19%, 29% credit cards, the vehicle loans, which are, generally can be significantly, a large payment on a shorter amortization, you remove some of those things, and then you can always speed up your amortization in the future. Like, mortgages, it's a season of life. Like, you're gonna go through 25 years on a mortgage. Well, there's going to be periods of time where one person's on maternity or paternity leave. There's times where maybe somebody's doing a career change or going back to school. There's times, but then there's times where both people the kids are old enough to be in school. Both parents are just cruising, full-time employment again.
Yeah.
Catch up. Make lump sum prepayment privileges.
Yeah.
Actually physically shorten the amortization.
Yeah.
All that's available. But to consolidate time and suit the needs of your family at that time is okay. Yeah. I think that there's a stigma around that, but
it's almost like they think another 25 years, that's it. It has to be 25 years. Like, no,
right.
There are things you can do to make it better.
Absolutely. Yes, just through even like the accelerated biweekly payments, that alone shaves off years.
Yep.
Like years and years of mortgage. So again, wait till the kids, I'm just using the kids example because that just seems to be so common. Mm-hmm. It's just when the kids get older, you don't need as much before or after school care.
Yeah.
That's when you get caught up.
Yeah.
And living through that pain is hard to see when people are struggling with, like you said, 6 payments on top of their mortgage.
Yeah.
And not taking advantage of some of the tools that they can have right now.
Yeah.
It helps their personal lives. Like talk about marriages.
Yeah.
Like the health that you can get when you remove some of that financial strain.
Yeah.
You're a better person to your partner.
Yeah.
You're actually present in conversation because you're not just spinning your wheels about bills.
Yeah. Got to make sure I hit that minimum payment. That loan's doing that. Like
totally.
Yeah. But there's some sort of stigma around having a bigger mortgage. Yeah. And not so much of a stigma around like, oh yeah, you got a car loan, boat loan, trailer loan,
right?
Whatever.
Yeah. You finance that hot tub at interest only forever, a 30-year hot tub loan.
Yeah.
That does not appreciate in value, sir.
No, it does not.
So you're right. That's right. Again, it gets back to the rate is going to be a bit higher when you refinance, mm-hmm. But if you look at what it does for the monthly expenses, the cost is often worth it.
Oh yeah, for sure.
Yeah. The other thing that's been on my mind this week was when you're talking. So as from a consumer, mm-hmm. I'm a first-time home buyer, or I'm looking for a broker. I got this from a financial advisor friend of mine who has a friend that's also a mortgage broker, and he confided in him to say that I really only submit my files to 2, maybe 3 banks, because mm-hmm. that's all the product knowledge I have capacity for.
Right.
And that kind of, my friend came to me and asked me if that was normal, and I said no. That's kind of the first. I don't hear that often.
Yeah.
Because of the way our organization works.
Yeah.
We have access to what I would say a large market, a massive market.
Yeah.
All the banks with all of their niches and all of their rate specials mm-hmm. and all of their incentives, all of that. So to hear of a broker that's really only able to mentally hold policy of 2 to 3 lenders,
yeah,
that irks me. Yeah. Because there's no way that they can truly feel like they're doing the best job for that client.
Right.
So my suggestion on that is, I think if you're looking for a broker or brokerages, it's fair to ask what is their roster of mm-hmm. banks that they're using, how many,
yeah,
and as well, like how many more, like how busy are they? And this is a weird question to ask, because it also treads on the fine line of, is a person not doing enough volume to be relevant in the industry?
Right.
Because it changes so fast.
Yeah.
You want to have somebody that's active, engaged, and current.
Yeah.
And then on the flip side, is your broker drowning with too much volume and too many clients, and they're not surrounding themselves with the support network,
right?
Like an assistant, like an internal underwriting department, like HR, like marketing, all of these hats. If that mm-hmm. person is a lone wolf, great person and has built a successful business to get to be so busy, but are they now able to service that business?
Right.
by hiring support.
Yeah.
So there's kind of two ends of the spectrum.
Yeah.
Is somebody too new, doesn't have the access or knowledge to make sure that they're getting the best product and rate and all that for their client, or is the person too busy and is not had the time to hire support or be at a brokerage where they offer support like ours?
Yeah.
So I think that's something too, and I think it's a fair question for somebody to ask when they're interviewing and looking at a potential broker.
Yeah.
Yeah.
That is a little bit shocking because I feel like our business is spread pretty evenly amongst a large amount of lenders.
Well, it has to be. Like, you think about in times of the year where banks, like, there's never been a period in time longer than maybe, let's call it several months, where a bank has sustained competitive rates.
Yeah. No.
They're in for a period of time because they have a bucket of money that they have available to lend out in mortgages. And when that bucket of money is gone, like, they do increase rates to slow the inflow of mortgages.
Yeah.
So nobody has endless money.
Yeah.
And there's seasons at all of the banks where they want to be competitive and where they just opt to not be competitive.
Yeah.
Because they need a well-rounded portfolio too. Like, they can't just funnel all of their funds into mortgages. So to know that a bank is only truly going to be competitive at the top of the market for combined, I don't know, how many months a year do you think one particular bank can be at its best?
I'd say a few months is the most that
3
you would see.
Yeah.
Yeah.
Like, we've had runs, I think of ATP as an example. When they're in, they're in. Like, they are competitive and they'll sustain it for a few months, but then without a moment's notice,
they're out.
And like way out. So then another bank has to come in and fill that void.
Yeah.
So
the other side of that would be specific products. So like certain lenders only offering specific products, and if that product seems to be what everybody wants, then that lender is going to take more of the business regardless of rate.
When you say product, like, we're generally referring to like people who need like home equity lines of credit,
right?
Or
a draw mortgage for construction.
Exactly.
Yeah.
Yeah.
Like specific things like that.
Yeah.
Only certain lenders do it. So.
Yeah, and do well and it can be competitive.
Yeah.
Yeah, for sure.
But yeah, like they can't sustain the crazy good rates for so long.
No.
And also, I don't think people realize that the banks are not endless supplies of money. I think they assume that they are, but they're not.
Yeah, like, it's dependent on how much they hold in deposits. Like, they rely on their day-to-day banking customers, and how much is held in deposits also determines how much access to lending they have. So like, there'll be a season where you'll see a flood of commercials promoting deposits, like open up checkings and savings accounts and get this cash back. Like, that's helps them build their book of lendable dollars. So it's something to keep an eye out. And to have access to the full market is a necessity, because you can never time. Like, if you're a true bleed blue banking guy, dang, you got to be lucky. If with the time, day, and month you need a mortgage, they're in the market.
Yeah. It also lends itself like to our organization being able to go to so many places versus independent, where you have to hit minimums at certain lenders.
Yeah.
So if they're not doing enough and they can only hit minimums at 2 or 3 lenders, then that's all they got options for.
Yeah.
So that creates a different problem for them versus being able to be a nice collective and have a system that flows and gives you all of those options.
Yeah, for sure. It's our greatest strength, is the market, having access to the market. So, again, at the time of this podcast, BMO was announced that they're looking to enter back into the broker channel. So it's going to start in Atlantic Canada first, but they're maybe by the end of 2024. So that'll be another major bank that's going to come back online. They were in the broker channel, but that'll be another bank that's going to offer hopefully some unique niches. And just another kind of tool in the kit that we'll be able to. So it's exciting, changes too.
Cool.
Yeah.
Do they have any idea when it's moving west? No.
The projections, the thoughts were it'll take a while.
Okay.
2024, maybe 2025 before it's like fully released. But it sounds like they're trying to do it in a few specific markets to get and it's also going to be underwritten by First National.
Oh, okay.
They're going to use the back end First National, just like TD does, and
be fast and efficient.
so yeah, for sure.
Cool.
Yeah, no, I think that was good. I like those topics a lot, honestly. Like when it was brought up to me about a broker really only having access to 2, maybe 3 as though they felt comfortable with, and then I heard it again from somebody else. Yeah, so there's a challenge right now too, because we're seeing terrible turnaround times. The lenders are taking a very long time, but volumes are down.
Mm-hmm.
Like we are not in that crazy 2022 market.
Yeah.
Like sales are not like that.
Yeah.
So why is turnaround time so low? Well, the assumptions and the data is showing that a lot of new brokers join the space and have joined brokerages where there isn't support, and they are just trying to do this on their own, working out of Starbucks, and they will get an application and they will just send it to 3 or 4 banks and like give it one of these, like, I hope I get something good back. Yeah. So you're wasting the time of all of these underwriters at the banks. Right. So there's actually been discussion that rumblings with these brokerages are getting a little bit of a talking to, and will actually get canceled. They will no longer be able to submit to certain lenders because the time per file is going way up. Right. So that's a huge problem, that needs to be addressed. So that's again when we package a file and it lands on our underwriter at whatever bank's desk, and they see it's from Innovative. Yeah. They know that they can pick that up and have that turned around within half an hour. Yeah. Every piece of documentation is going to be provided. It's detailed notes itemizing the things that they need specifically to know about that file. Yeah. So that's another, thing that we pride ourselves on too, and is important for the health of this industry. Yeah. To have a bunch of newly licensed brokers out there running amok and kind of bringing down the credibility of the industry and turnaround times and realtor, like everything's on timelines. Everything has a timeline. Yeah. And to be jamming up the process because they don't know the product, they don't know the policy. Yeah. Is a problem. Yeah. Or
Even if they just don't want to put in the work. Because it takes more work to get everything ready. Yeah. But it's always better to do that work early on.
Absolutely. Yeah. So those are the brokers, honestly, that need to find a mentor. And there's guys like us out there that are saying like you need help. Yeah. This is a wonderful career. Yeah. And it's even better when you're not living in constant fear and stress and uncertainty on knowing what's an approvable or unapprovable file. Yeah. Like when we send a file in now, like our approval rate is in the 99%. Yeah. If it makes it into a submission status, like it is approvable. Yeah. So take that away, as the flip side, knowing that there's guys out there and women too starting out that don't have that support, don't have that knowledge, and they're just sending it in and holding on, saying, God, I hope somebody likes this file.
Right. Yeah. Which is not the way to go about it.
No, the stress, we are tasked with such an important thing, people's finances and especially their mortgage is a massive responsibility. Yeah. And it should be taken lightly. So I would encourage any of those, brokers out there to find that mentor, find that organization that doesn't just promise a nice little training curriculum, but actually follows through on that. Yeah. Yeah, super important stuff.
Yeah, definitely.